Welcome to Tech Intersect. I'm your host, Tanya Evans, and my life and work exist at the heart of law, business, and technology. Yeah, I've earned a few fancy titles and degrees over the years, but the bottom line is I'm a writer, speaker, teacher, and lifelong learner, and I'm really excited that you've joined me on this journey. So what is Tech Intersect? Well, it's authentic, empowering conversations with really interesting guests who demystify complex topics to prepare you for the future, because your future is now. And it exists where law, business, and tech intersect. Get ready to listen, learn, and leverage. Let's get started. In this episode of Tech Intersect, I speak with Dante Disparte. He comes from the world of risk management, governance, and security in legacy financial markets and now in crypto markets. Dante is the vice chairman and head of policy and communications for the Libra Association. It's an independent membership organization headquartered in Geneva, Switzerland, that is focused on creating a stablecoin, the Libra coin, that supports a financially inclusive digital future. He's also the founder and chairman of Risk Cooperative and serves on the Federal Emergency Management Agency's National Advisory Council. And now, 1 year into the LibraCoin project, Dante and I delve into an illuminating conversation about its evolution, the current status as of Q 2020, the Facebook privacy controversy and testimony before the United States Congress and the regulatory landscape, and also plans for a fall 2020 launch in the United States and beyond in order to empower the unbanked and underbanked around the world. Our discussion takes place in the midst of the COVID-19 pandemic, so that has really helped to make the case even more clear and strong about the need for cryptographically secured digital, user-directed, low-cost, contactless payments. Now, before we dive into the episode, I want to share some really exciting news with you and tell you about an awesome opportunity I hope you take advantage of. First, the news. Drum roll, please. Okay, there are no sound effects, so no drum roll, but imagine in your mind, if you will. I've officially launched my own online academy for live small group coaching on a range of topics. The academy is called, this should surprise no one, the Advantage Evans Academy. And it's your fast track to learn and earn and prepare for the future of investing, entrepreneurship, and work. Each session is a 3-week intensive with live video conferencing, and of course it's recorded in case you miss a class. You'll have opportunities to interact with your classmates, lots of milestones and supplemental information, and direct guidance and support from me and other guest experts to help you get and keep you ahead of the curve. The first course, which begins June 30th, is From Cash to Crypto. And I'll teach you everything you need to know about cryptocurrencies, about how to buy and sell them, to invest, to earn them, and also, and most importantly, to protect them. And you'll do so legally and safely. You'll create a wallet if you don't already have one. I'll send each student a little Bitcoin to get started. And for those who pre-enroll before May 31st, you get a bonus session about crypto taxes and also a 1-year membership to CoinTracker to help you prepare your tax information the right way. My second session is Register Right, and that is all about how to create, protect, and register your intellectual property, the different types of intellectual property, but we'll focus mostly on copyrights and trademarks. We'll go through the step-by-step process to file your copyrights and trademarks, and I'll also provide specific and actionable information to protect your brand and your business. For more information, visit advantageevans.com today and be sure to join my mailing list to be the first to receive announcements and exclusives. Okay, time to listen, learn, and leverage. Let's get started. Today, I have the great fortune to speak with Dante Disparte, Head of Policy and Communications at the Libra Association. He's an entrepreneur, a business leader, and global risk advisor. And one of the many reasons I respect him so deeply and thank Sandra Rowe for introducing us is Dante's deep and abiding commitment to the intersections of blockchain, digital transformation, and financial inclusion. A lot of people talk about it, but Dante is about it. So I look forward to this conversation and sharing it with you all. Dante, welcome.
Thank you so much, Tanya. It's great to be on the program with you.
Excellent. So it didn't matter how long it was going to take. I trusted you and the universe that the stars would align and it would happen when it was supposed to happen. And this is our moment in time. So let's enjoy this.
Indeed, we've been conspiring with the universe for quite some time to get on this broadcast together, but I think indeed it's the right time, and there's a lot going on in this world right now.
Absolutely. So let's begin with a brief overview of your origin story that professionally led you to the world of cryptocurrency and blockchain generally, and then this latest project, the Libra Association specifically, and then we'll get into some of the other details.
Yeah, so I'll try to spare you the earliest part of the origin story. Suffice it to say, I was the kid raised by a village and grew up in very modest beginnings on the lovely island of Puerto Rico, and spent really the vast majority of my time and energy in the risk and resilience space. So before joining the Libra Association, I founded and continue to chair a company very active in the world of risk and insurance, and trying to do, this question of insuring the uninsurable. How do we address big, complex, emerging risks? And that's what originally brought me to the cryptocurrency and the blockchain space. Was many providers and many operators in that sector, I think at that stage and very much still today, wanting for risk management and governance maturity, kept turning to the insurance sector to provide that sort of external seal of approval, if you will. And it was everything from directors and officers coverage to cybersecurity to questions of physical security, and then and personal security as well, with the likelihood of kidnap and ransom events and cryptojacking. So I came at crypto really looking at how to solve the question of how do you underwrite it and how do you make this risk and this asset class palatable to put on someone else's balance sheet.
That's really important. And I can see as you talk through it how this could be the perfect transition, really, for you with some of your background and experience to then move to this next level in the stablecoin realm. We'll talk about that more specifically in a moment. But I want to introduce the audience now to the Libra Association, Libra Coin. I had the great fortune. I saw you there in DC as I was in the audience and going before Congress to even explain it all. That I thought that was a really interesting and important opportunity for the crypto asset ecosystem at large to really start to delve into all of the benefits, the challenges, the concerns, and really vet it publicly in a way that we'd only really talked about it within the more niche area of crypto, right? From a libertarian perspective or something like that. What I learned from that hearing, and certainly from all of the information that I consume online, some of our discussions, other think tank discussions, is there are a lot of moving parts and a lot of misinformation. There's the Libra Reserve, the Libra Coin, the Libra blockchain, the Libra Association, right? So if you could give us a kind of a high level overview of the association and its connection to a relationship with some of the other parts to help just level set before we dive in a little deeper.
Sure, no, of course. And as you described those fateful days of the early days of the Libra project when it was initially announced and congressional hearings on a lot of these issues, I think that's a good starting point for this, because perhaps dissimilar to many past breakthrough innovations, especially those with technology, where oftentimes operators and sponsors have to ask for forgiveness rather than permission. I think one thing that's very unique about what Libra is trying to achieve with blockchain and cryptocurrencies and stablecoins and this entire ecosystem is that we have to have regulatory clarity for this to work. And so that's where, I think that beginning of those public hearings all the way through to today, a lot of my effort and a lot of the effort of the association overall has been to really bridge the gap around cases for regulatory clarity of this entire asset class. At the same time, you now have this big event on us, the pandemic, that just underscores, if anything, had to underscore the use case for user-directed, low-cost, contactless payment networks, then you now have that use case right in front of us as well. But to take all the moving parts, so the Libra Association turns as a concept 1 year old on June 18th this year.
Wow.
So from white paper and initial publication of the white paper to today, it's a year old project. And while FinTech moves very fast and the world certainly moves very fast, it is humbling to look back at the last 10 or so months and reflect on the journey we've had so far. The association is an independent member based organization headquartered in Switzerland. We have now 27 member organizations with a newly announced round of members just last week. And then we're in the midst of really working on three primary work streams. The first is to ensure the robustness of the technology. As an open source technology, the Libra network is really being designed to promote responsible financial services innovation and broad interoperability of the payment network and the tools that can be built on top of that. So that's ongoing work. We have, of course, work to continue standing up the operations of the association and readying ourselves for launch later this year. And then lastly, of course, probably the most important piece of the puzzle is to ensure we get the regulatory structure right for this project. So we're in the midst of licensing review with the Swiss regulator FINMA as a payment system, and then building out an appropriate regime to govern the network overall, for which I expect more consultations, more conversations, and more alignment between regulators and public interest around how a network like this one can make a difference.
Right. You took on a lot of the headwinds, and to your point earlier about, you know, the front end of asking having those conversations and really moving ahead in order to figure out in this borderless context, what are the regulatory guides, guidelines, laws, rules that need to be adhered to across not just one country, but the entire world. That's really difficult stuff. And again, rather unprecedented to do it at the same time. Sometimes we see a company, for example, or a project that begins in one jurisdiction in particular, and then over time becomes, an international juggernaut very methodically. The fact that you just said, as you said, June 18th, and I remember obviously, where I was and the hearings and all of those things. This is an unbelievably short period of time to do something this big, right? So, first of all, kudos to you. And it's far more difficult, it seems, to deal with people on the front end as you build rather than build and then go back afterwards. And so we're all watching from the sidelines to see how that works. And this is about the good faith of a project like this that says, no, this is not one entity that is leading the effort. This is a multi-stakeholder organization, many different interests. And I want you to talk a bit about that, not just folks on the finance side, but also perhaps NGOs. Talk us through the members of the association and the original vision, maybe, but more specifically where you are now in terms of the multi-stakeholders participating in the association.
Yeah, so Libra is every part, the Libra project, right? And the Libra Association is every bit the concept of an uncommon coalition, right? This notion that, the challenge we're trying to address, fundamental, very large scale levels of financial exclusion, more than 1.7 billion people around the world without access to a bank. Meanwhile, about a billion of them have access to a low cost, internet ready mobile phone. And so if this is a problem that no single entity could take on their own, and so you really do need to form these types of constructs around it. And then when you think about the fundamental aspects of what blockchain technology is all about and some of the first principles that underpin this technology, not just as a technology, but also as a design concept of empowering people, democratizing access to payments, leveling the playing field, reducing the cost without sacrificing trust. And then where better to start than in basic payments, right? Basic payment networks around the world are largely riding on dated technology. They're very slow. Inside the walled garden of a payment network, you have access to very low cost payments. The second you have to make a payment outside of that network, you're then subjected to a range of fees and slower services and so on and so forth. And so, I think to address that challenge, it's too big of a challenge for any one organization to tackle alone, especially if the network is being designed as it is to support billions of people.
Right.
And to sort of, with that, I think there's a secondary effect of The potential mass adoption of cryptocurrencies and digital payments is certainly a secondary effect. And there's also, an important secondary effect as well, which is that, for Libra to succeed, we have to ensure a very strong regime that um, protects consumers, ensures regulation, ensures safety, and then promotes the safety of the financial system as well. So we're really pursuing a regulated 21st century payment network, and at the core of it, you have this coalition that drives the governance of the association, and then you have this blockchain technology that underpins the ability of scaling that payment network up to support billions of people.
And that precise point about global remittances, cross-border payments within the existing system seems to be the primary pain point, and the reason that a stable coin like Libra coin would be issued, and I don't even want to use the word issued, but created and this project to facilitate and address and resolve the cross-border payment issue. My understanding from going through the white paper and reading some other materials, that because of what you said, that even if people are underbanked or unbanked, not just in the United States, but around the world, that many, many more people have access to a phone. And even if at times you don't have 24/7 Wi-Fi, to have access at some point. And that is an issue, certainly, as you continue to build your robust technology and to continue to scale. But, to really rely on mobile network, something that is stable and therefore reliable, something is much faster than remittances or cross-border payments at this time. I don't. What's the number? Like 3 to 5 business days at this point?
Well, yeah, I mean, not only do you have to wait in terms of the delivery, both ends of the spectrum, generally it's a physical activity. You also have, on average, globally, about 7% fees to send money across borders or internationally. And it's a very big cash flow. It's greater than $700 billion as of 2019. And if you add up the cost, and of course, as is true of many aspects of the financial system, the people who can least afford it pay the most for even basic services. And so if you add up the cost of remittances, and then you add in the speed with which they arrive or the slow speed with which they arrive, and then you throw on top of all of that already largely dysfunctional system, a global health crisis that requires social distancing, and then the concept of going to pick up a remittance at a physical location, is not only cost prohibitive, it's potentially dangerous, right? So
Right.
in this environment, networks like Libra could be game changing, and they could certainly put more of the money people make back in their hands. And then more of the money that people send to their loved ones and family could notionally arrive faster. All of these issues, I think, are very real. And, networks like these could be really important parts of that solution.
We hope you're enjoying this edition of Tech Intersect. Our conversation will continue in a moment, but first, a word on an exciting opportunity.
You love listening to podcasts, but have you ever thought about starting your own podcast? Maybe you want to build a brand, grow your business, or are looking for an excuse to talk about your favorite hobby. Whatever your reason for making a podcast, Buzzsprout is the place to start. Since 2009, Buzzsprout has helped over 300,000 people launch their own podcasts. Buzzsprout walks you step by step through the whole process and will give you powerful tools to start, grow, and monetize your podcast. Ready to get started? Click the link in the show notes to get our free step-by-step guide to starting your podcast today.
The Tech Intersect podcast is released to the public every Friday. But as an Advantage Evans member, you'll receive first listen access and live Tech Intersect Connect video chats. Premium members also receive a copy of my ebook, The Gen Xer's Guide to Upskilling in a Web 3.0 World, and unlimited access to the video chat replays and bonus episodes. My pro members, ready to leverage what they've listened to and learned, receive access to the Upskilling Self-Guided course and VIP group coaching calls. So as you can see, Advantage Evans membership adds substantial value to your podcast experience. And there are 3 ways to take advantage, see what I did right there, of all that the Tech Intersect podcast has to offer. So subscribe now and let's listen, learn, and leverage together.
And now, back to the conversation.
And when I think about, oftentimes in the blockchain ecosystem, and when I think about other projects in the DeFi space, for example, or I'm the chairperson of the newly created Maker Ecosystem Growth Foundation for the Maker DAO. The foundation is separate and apart from the project, so I understand very much when you make the distinction between the association versus the coin itself, for example. But there's always talk and build and angst around whether or not a project is scalable. We didn't actually have that concern with LibreCoin when we think about all of the rails that are already in place from a network effects point of view. Oftentimes with a project, it might be a brilliant project, but if it could only reach hundreds or thousands or tens of thousands or even hundreds of thousands or in the low millions, that is one thing. But the opportunity for scalability for the existing network infrastructure that not only Facebook, obviously, but other multi-stakeholders involved in the association, that actually brings a great opportunity to solve for some of the things you've mentioned. Can you talk a bit about scalability, what the existing rails are, and the security of those rails?
Yeah, no question. I mean, I think the scalability question has to be matched peer to peer, right? So if you think about, if you're building a payment system designed to support billions of marginalized people and what I would characterize as sort of high throughput, high volume, low value payments. So, the average remittance coming out of the United States, depending on, which report you look at, is anywhere between $1,200 and $3,000 per year. So oftentimes these are very small, de minimis transactions that are sent relatively frequently to family and loved ones back home, if we stick to the cross-border use case. And so in order to fulfill that, you have to operate a system that, one, can support transaction volumes akin to peer organizations and payment networks, and that's part of our design. But you also have to be able to empower the user in this type of network. So I think one of the real breakthrough design concepts of the Libra project is not only the way the blockchain is being stood up and the type of security and the algorithms that underpin, how Libra transactions are verified and validated by the network. Mm-hmm. There's a lot to be said as well about the notion of interoperability. That, I often use the metaphor of email networks. That, what good would email networks be if you had to pay to send from one network provider to another? And if the transaction process was very slow, it would defeat the purpose of what email has done and the internet has done for information exchange. And so in many respects, payment networks of the world today have that lack of interoperability, and that lag is really grinding down the ability of free-flowing commerce and payments between people. And so I think one of the very ways Libra has been designed around this is to enable various wallets to interoperate, so that, there is no walled garden, and a Libra provider in one country or another can effectively consummate a transaction on this network. So candidly, I think over time, more and more of what Libra is building should be viewed as digital commons, because again, the code is open source, network is open source. The association is working very hard to continue designing a regulatory regime around this that promotes good conduct at all corners of the project. And so in that vein, we think there's a lot to be gained here as both public and private opportunities.
That makes a lot of sense to me. And I also wonder, because you said that, and first of all, I want you to define what a stable coin is. I will drop in the show notes just so that we can compare and contrast. There are those who will have a deep level of knowledge of what we're talking about, and some who will know little, if anything, may have heard of Bitcoin, and to compare and contrast something that is purely public and permissionless, no association who's involved in onboarding, offboarding, in terms of participating in the process, versus what I describe, and maybe others, as a corporate coin or something that has some level of control, although having some aspects of decentralization, but also some control over who participates, from a KYC AML perspective. And what I imagine is that we'll have pure public permissionless chains, and then we'll have others that are permissioned, and for a host of reasons, maybe in the healthcare sector, for example, and obviously in some aspects in the financial sector, which is already, both of those are already excellent examples of an area or industry that's already heavily regulated. So it's not going to become deregulated just because there's a new technological kid on the block. But how you respond to this issue, first, of the distinction between stablecoin and something like a Bitcoin, and then also from the ecosystem's perspective, who wants to have nothing to do with anything that's not pure public and permissionless, right? Because I think also we have the internet, but we have intranet activity, and that seems to be working just fine. So your thoughts on all of that?
Yeah, no, absolutely. So, I mean, well, first and foremost, I think a stable coin, to define it for your listening audience, is really a cryptographic asset or digital representation of an underlying asset that would otherwise be well known and secure. So, in most instances, a stable coin is pegged to a traditional currency like the US dollar or the British pound or the euro,
Mm.
as an example. And to carry forward that type of stability, then the stablecoin ought to be backed one to one with the traditional asset so that at all times people can liquidate it and then they could use it as a means of payment without falling prey to sort of buyer's or seller's remorse, right?
Mm.
So that's where I think a stablecoin on its own has a lot of very unique properties. And then what the stablecoin construct does for the traditional currency is it then enables it to become programmable money, right? So the
Hmm.
many cases using traditional payment rails and traditional currency, oftentimes very small transactions cost more to send or spend than the sum of money being sent. And so that's one of the oddities of traditional payments. Whereas a digitally native payment instrument like a stablecoin, small fractional transaction would carry the very same cost as a very large transaction. Therefore, you could enable a whole range of other use cases that haven't been thought of yet.
Right.
Micropayments become possible. Then, when you add in the effect of smart contracts and the notion of programmable money, there's a whole host of other things that you can do in a payment network that lowers the administrative costs and the overhead cost of serving consumers. And so I think, again, a secondary effect of these types of networks scaling up is that you could envision a wide range of different use cases that can be supported on top of them without sacrificing the types of controls, compliance, and oversight the financial system warrants.
Right. And when you think about that, that point is so important because now I'm thinking in the age of COVID-19, why everything that you've said and everything that was proffered as the pain points the project seeks to resolve are really brought home with COVID-19. Talk through some of the most pressing concerns in the movement of money and assets now that could be resolved from a project or by a project like LibreCoin.
Yeah, I mean, it is, of course, clear that if you were financially marginalized and underserved before the crisis and subjected to high cost services and slow physical pickup locations to receive international payments, or let alone to receive basic banking even in a domestic setting, that would only be exacerbated by a crisis that would require you to not only potentially stop working, but to you would be confined in your home. And so it is a double jeopardy. On the one front, you have hundreds of millions of people around the world who are internet connected and plugged in,
Right.
but because of the fact that so many of them are on the margins of traditional payment systems, or the cost of being poor is physically too high. And an example of that is the oddity of, if your bank account balance hits a certain low threshold, you then are hit with non-sufficient funds fees, $35 every time. So there's the oddity of the cost of basic services so cost prohibitive that it pushes more and more people out. And so networks like these that are not only mobile enabled but user directed would greatly facilitate the ability of paying people very accurately in real time, which I think was one of the reasons the first version of the stimulus bill had a provision in there around the concept of a digital wallet for US citizens and the creation of a US dollar stablecoin,
Right.
where they're backed by the central banks of the world or where they're backed by private sector initiatives. I think that the time has come. I mean, there's a reason something like 70 central banks around the world are looking pretty long and hard about these types of innovations, whether they're direct innovations from the central bank digital currencies, or whether they are the private sector variants of stablecoins. I think this is an innovation whose time has come, and the market is demanding it. These are innovations that can be done in a sound manner from a regulatory and public safety point of view. And there's a lot to be gained if these types of tools existed and reach scale.
Absolutely. And so we definitely can see in so many different ways the value add and value proposition. And I think it's not a matter of if, but when. And I know that you believe it, or you wouldn't be doing the work that you're doing either. I think about all of the privacy concerns that have been raised in light of Facebook's involvement in the infrastructure build and creating the parameters by which other entities would participate on the association side. In light of all of the privacy concerns, what are some actions that the association is taking in order to address those concerns and alleviate those concerns?
Yeah, no, it's a great question, and as with all other aspects of the global compliance and regulatory frameworks for this type of network to really exist and thrive, privacy, needless to say, is a cornerstone of the project as well. And we're following a few kind of high level approaches here. The first is a privacy by design approach to build and design a network that is conforming to a range of privacy standards, whether it's GDPR in Europe, and then abiding by that standard and then making it a norm across the spectrum.
Right.
That would be one broad point. The association itself, as you may know, of course, is not dealing with retail consumers. It's principally operating on the basis of having institutional counterparties.
Mhm.
So the association isn't necessarily collecting any type of personally identifiable information or other data in that manner. But much like we're doing with our compliance framework around anti-money laundering and sanctions compliance and other forms of the compliance regime, we're trying to work around designing a privacy framework for the project that would promote a very high standard across the network and a standard for the operators that are on the network to protect consumer privacy. And so, like other payment systems operators, there always is a need for basic transactional information to protect the integrity of the financial system, while at the same time, the protection of consumer privacy has to remain a cornerstone of this network as well.
I know you're working hard. I know that you continually, and now it's the collective you, but certainly the individual you, working through all these really, really difficult and challenging issues to make sure that there is financial inclusion and digital inclusion, not just for some, not just for many, but for all. And so that's why I'm really excited about what you're working on. I look forward to continuing to cheer you on. There's always synergy in what we do. And I'm really grateful that you came on today to talk through some of these things and give us the Libra Association update. So as we get ready to end, please tell people how they can stay in touch with you and learn more about Libra Association and Libra Coin.
Well, first of all, thank you so much, Tanya. It's from having guest lectured in your classroom and now having
Yes.
this guest appearance on your podcast. It's always a great pleasure being with you. And then, look, the only official source of news about the Libra project is the Libra Association's website, libra.org. And of course, over time, we aim to remain very available and very visible insofar as the news and developments with the project are concerned. And we've been communicating a range of new updates lately, from new members to key executive appointments in the project. And so 2020 is a milestone year for us. We're very much eyeing a continuation of our plans to hopefully get the network live by the end of the year.
Amazing. Well, I wish you great success. I'm watching, cheering on, as I said. Have a great day and also stay safe, stay well. It's really great to connect with you again. The ultimate goal of the Libra Association is to offer a digital cash alternative that is global, stable, and secure so that everyone, regardless of their station in life, can participate fully in the global economy. Libra is a global payment system designed for the digital world, especially cross-border payments. It's powered by blockchain, making the global economy accessible no matter where you are or where you're from. So interoperability is also a key goal. While the Libra Association's formation and Facebook's role is not without controversy, given the serious and substantial concerns about privacy or perhaps some type of anti-competitive behavior, the project has many parts and players. The Libra Reserve, the Libra Blockchain, the Libra Association, this uncommon coalition of entities, and the coin itself. So it's bigger than any one person or entity, and that's the point. The project is moving full steam ahead. So DYOR, do your own research, push beyond misinformation, and make sure you're informed about this and other stablecoins and cryptocurrencies. And that reminds me, of course, if you'd like to learn more about how to participate in the new digital cash economy, visit advantageevans.com, enroll in my online summer course, Small Live Coaching Group, From Cash to Crypto, and I'll teach you everything you need to know about cryptocurrencies like Bitcoin and how to buy, invest, earn, and protect your crypto. Pre-enroll by May 31st. Pay in full for a bonus session on crypto taxes and a complimentary 1-year membership to Coin Tracker. This is a small group, so I can only take a limited number of people. Secure your spot today. I'd love to work with you. Okay, that's all for now. Until next time, continue to shine.
Stay in touch with host Tanya Evans via your favorite social media. On Twitter at TechIntersect. And on Instagram via the handle TechIntersect. This podcast has been produced by Stephanie Renee for Soul Sanctuary Incorporated.